a positive note, the second quarter gross domestic product was revised up to 3.3 annualized, a positive boost to gross expectations. However, consumer sentiment dipped, as did confidence in labor markets. Upcoming August employment data could heavily influence the Fed's decision on potential rate cuts in September. So there's uncertainty on both sides between the jobs and the inflation market, or the inflation reports. On one hand, the Fed has been focused on keeping inflation under control, but uncertainty remains around the extent to which tariffs will result in higher prices. On the other hand, the labor market has been showing signs of slowing down, and there's uncertainty around how much that will continue. As I said, in the bond markets, the Bloomberg U.S. Aggregate Index, that added 0.16% for the week, with a year-to-date return of 4.99. Very, very strong. The U.S. Treasury curve did steepen last week, reaching its most pronounced slope since 2021. So we want to see a steepening of the yield curve. This was driven by a significant rise in long-term yields relative to shorter yields. This can often signal investor concern over inflation or increased government spending. And she talked about the U.S. dollar here. Gold gained 3.34% last week and is up 32.04% year to date due to these inflation concerns.